From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, good afternoon. Welcome to the COB. I'm Danny Akuye and I'm here with
Juliet Sarli. Happy, Tuesday?
Happy Tuesday. And it's great to have you back, Jules. I had to fly solo yesterday, which was a bit of fun, or not so, a bit of hard work.
Well, I'm back. Came back from the sunny Gold Coast. Don't have a tan, but that's a good thing because we don't like to tan these days, do we? But let's have a look at whether the market is tanning itself. It is up 0.8%, and certainly most sectors rising today. Really, that rebound in commodities helping. So 9 of the 11 sectors moving higher.
Absolutely, and the ASX 200 up about 0.9% or 62 points over that 7,000 level, 7,010. But we'll have to wait a while to see those closing prices come through. So let's have a quick look at some of the sectors, because we did have CBA, and we are going to talk more about the banks, but let's just have a quick look. And it really was Westpac leading the charge there in the banking sector.
And NAB, of course, trading ex-div, so it was down 3.1%. Let's have a quick look at energy, because we mentioned the rebound in commodities, and certainly energy stocks were a standout. A lot of the majors up over 2%. Beach Energy there up by 5.3%.
Yeah, absolutely. And just making the point that also we actually had the likes of the materials sector, that was also really strong as well today. It was up about 1.3%. But technology, also quite a lot of green on screen there. Have a quick look. So across the board, with WiseTech and Block up by over 2%, and also Altium and Xero up by about 1.2%. But let's have a look at some of the three themes that we're talking today. Hey, Jules?
Yes, well, as I mentioned, really is all about the banks. What we heard from CBA coming through with its quarterly numbers, that 1% gain there in the quarterly profit. And then, of course, we mentioned NAB going the other way because it was paying out its dividend. But really interesting to just get a pulse read, I guess, from the banks, particularly amidst these high interest rates.
Absolutely, and we are going to talk more on the banks in a second. But another theme that we have been chatting a lot about with the UBS conference, and just generally with a lot of the economists, is the effects of immigration that this is having on our economy. And the RBA, in the Statement of Monetary Policy, SOMP, as well as the speech that we heard yesterday from the Deputy Economist, Marion Kohler, basically saying that the economy is firmer than expected, and they've upgraded in terms of their benchmark of where they see inflation. And it's largely due to this strong population growth that we're seeing here.
All right, and also we're looking ahead to the US CPI, the core inflation number. That's going to be key as well for the Fed and what they do next. But let's have a look at some of the top stories of the day.
Absolutely. So a quick run through. So CBA statutory cash earnings were up about 1% on the quarter, but largely changed on the year. And CBA has finished the purchase of more of $700 million of shares on the market.
Telstra shares closing down 2.1%, $3.87. They had their investor presentation day. Interestingly, the CEO Vanessa Hudson talking about they have seen a little bit of a pickup coming through from some of the Optus customers, but they also, of course, announced these 5 new major routes, as well as an expansion of their fibre connections in the Pilbara region in WA, and reconfirmed their full year guidance. But I thought it was interesting what she was saying about they did see a little bit of a pickup from the Optus outage, but they're not expecting it to be material because they saw that last year with the cyber attack too, and then it only lasted maybe 6 weeks or so.
Yeah, and let's face it, we really need at least two major competitors in the communication space. It's actually very important to keep both of them hopefully honest. Now, OFX group shares are down today, because this is despite reporting a 5% pop in first half net profits on a 9% rise in revenue. And investors seem pretty unimpressed, as the company says it won't pay a interim dividend.
And ALS shares tracked higher. This was despite posting a nearly 10% slide in first half net profit and lowering their dividend and guidance for the year ahead. They closed up by 9.2%, $11.65.
And one of the favourites is Telix Pharmaceuticals, and they have been a bit busy. The shares are up today by about 0.9% as the company snaps up US-based therapeutic company QSAM Biosciences for just shy of $200 million in cash and equity.
And the stock of the day was Telstra. We spoke to Mark Morland from Team Invest and Josh Barker from Macro Capital.
I just don't think it's got sort of huge capital uplift from a business point of view. Maybe they pick up some extra retail customers, but the business segment is still going to struggle. We'd actually prefer Aussie Broadband around these levels. Higher growth prospects and recently supported by a capital raise. So I think those prices should largely hang in there.
So the problem is, because the earnings aren't growing and they've got a 11% average over the last 6 years decline in earnings, I can give you a buy price to get a 10% return on it. To get 10% return on Telstra, you can't pay more than $1.60, which is less than half of what the current share price is, because it's on a 22 PE, which is ridiculous for a company that's earnings are in decline. Now that's because a lot of people have had it as, as you said, blue chip. So there's a lot of support and it's in a lot of funds. But there's no justification for it. And our models are showing if you bought it today, you're going to lose 8.2% a year average over the next 5 years.
Okay, so I guess not too upbeat about Telstra, but let's now welcome to the COB, Martin Crabb from Shaw and Partners. Martin, thanks so much. Always love to see you in the studio when you're not travelling.
Always a pleasure.
Okay, banks and more banks.
Yeah.
It has been a lot of banks. So how is it wrapped up in terms of an earnings season for the Big Four?
Yeah, it's been not too bad. I mean, we've got to, I suppose, recognise, Danny, that we're seeing the banks at their absolute best. At this point of the cycle, rates have gone up, which allows them to boost their net interest margin because they pass the rate hikes onto the mortgages straight away. They're a bit slower with the deposits, and they've also got some deposits that don't pay any interest. So they get this net interest margin expansion, but we haven't seen any bad and doubtful debts. In fact, CBA's result out today is 9 basis points of bad and doubtful debt expense. It's nothing, right? So we're not seeing the pain that higher interest rates are going to bring. We're seeing the benefit to the bank's net interest margin. So having said that, the results are okay. They were kind of in line. ANZ was a little bit softer, but we just think this whole sector is expensive. So given what I've said is that you're seeing the best that you're going to see from the banking sector, the valuations are quite rich. So the TSR of the bank, so if you take the analyst's 12-month target price, add the 12 months dividend you're going to get, divide that into today's share price, you're looking at about a 2% TSR. So you can do better in cash, you can do better in government bonds, and you do a lot better in the market as a whole. So we take the banks out of the market, you're looking more like 14% TSR. So that difference, that 12% difference, is about as big as it gets. So it's suggesting that you take money out of the banks, which have performed really well, and put it into non-banks, put it into everything else. So that's what we're doing with our portfolios. We're fading the rally, as we call it, in the banks. We're taking the money, we're pocketing the profits, and we're looking at other things like materials.
I was going to say, like materials, I mean, the big miners today up again, that iron ore futures contract continuing to rise. It does look like there's some positivity in terms of optimism around the beleaguered China sector.
Correct. It's the begrudging upgrade cycle, Juliet. So everyone's got iron ore going to, the federal government's got it 65.
Oh, nice.
Most investment banks are 85. And they've all been moving it up because, hey, it's 127. Everyone knows that China's slowing, but it's still 127. Run that through your model, you get massive upgrades. Fortescue's the biggest, it's the most leveraged, but BHP and Rio not far behind. And finally today we saw a bounce in the lithium stocks, which have been a one-way trade for months, so they got a bit of a kick too. But yeah, I think most PMs, most portfolio managers are underweight iron ore. They've probably been overweight banks running into the results. It's time to go the other way, switch out of banks into miners, particularly iron ore stocks.
So would you actually completely sell out of banks? I mean,
No.
most punters are not going to do that because they just hold them for the
It
long
depends.
term.
Yeah, look, it depends how indexed or where you are. They are 20-odd% of the index. So being zero is a big bet. So if you're wrong on the economy and we have a soft landing and there's lots of immigrants coming and buying houses and borrowing money, then you want to be in the bank. So never zero for us anyway. But look, for some investors who don't need franking credits, for example, the big advantage of being in the banks is getting those franking credits. If you don't need to be there, you could be zero weight, but it's not something we would do.
Yeah.
Speaking of the economy and being right on it, I know you've been looking at the overseas arrival and departures figures.
Yeah.
You say people love travelling, they certainly do. What are we seeing? What is that showing us about the economy?
Yeah, so the ABS comes out every month with arrivals and departures. They're a little bit of a proxy for immigration. So if you take total arrivals over 12 months and subtract total departures over 12 months, you get about 500,000, which is kind of where immigration's at. In fact, immigration might be a bit higher. Now, they track each other because you go out of the country, you come back in. So most of us go overseas for a holiday, not for permanent. But you can see we're still shy of where we were pre-GFC. So back in January 2020, there was 22 odd million movements, as they call them. We're now about 16.5. So we've still got another 30% to go. One of the reasons we like travel stocks, and Qantas in particular, is there's another 30% growth in travel volumes that we still haven't seen yet. So we're still recovering. And you'd have to say that even because of revenge travel, we might even go above where we were pre-COVID. So it might be more like 25 or 26 million visits, which is a visit for every Australian, right? There's only 26 million of us in the country. So I have seen some analysis by other investment banks looking at people's propensity to travel, and it's at record highs. People want to travel now more than ever. Yes, it's expensive. Yes, the airlines are a bit tricky in terms of cancellations, but people have just missed out on it for so long. They want to get out there and experience some overseas travel.
Even domestically, I mean, I said I was coming back from the Gold Coast yesterday. The way there, the way back, flight completely full. My friends from Adelaide, their flight was completely full.
Well, I guess
the
they've cut
lounge,
the schedules,
yeah, I
haven't
guess
they?
so. Yeah, the
Yeah.
lounge absolutely packed. You know, like it's incredible.
Yeah, and we're seeing global airlines start to reorder again. I think Emirates ordered 100 Boeing 747 Maxes, which they were the ones pulling out. 767, sorry. Yeah, so people are getting out and buying new planes again, which is a sign for the capacity is going to grow. So I think the travel's a great space to be. And everyone says we're at peak travel, but we think things like Qantas in the big caps and Hello World in the small caps still look really attractive to us.
Okay, well there we go. Get your YOLO travel hat back on again. In fact, we haven't taken it off.
Exactly.
Martin, thank you so much as always for
Thanks,
joining
Danny.
us. Okay, that was Martin Crabb from Shaw and Partners. Now, Jules, should we check in and see on some of what were the movers and shakers today?
Yeah, let's have a look at the top leaders of the day for Tuesday. As we round out the session, we were talking about, of course, the fact that the sectors were mostly higher. ALS, we're talking about that, up 9.2%. BrainChip Holdings up 6.5%. Life 360, Helios and Beach Energy all looking good.
Yeah, so I think Beach actually had an AGM today, and I was snooping around for Life 360 to see if there was some news, but I couldn't find any. Let's have a look at some of today's laggards and see what we have there. So Link Administration off by over 3.5%. Origin Energy, Australian Super not prepared to join the bid with Brookfield and EIG, I think it is, EIG, yesterday, so they've pulled out. NAB's gone ex-dividend. Lake Resources often traded heavily, off by about 3, and Lovisa down about 2.7, but they were up yesterday.
Yeah, and I think is that what you were talking about, the other twist in this Origin takeover battle? Yeah, so coming through from this 11th hour bid. All right, let's have a look at the small caps. Don't know any of those.
No, so Raiden Resources has gone up 47%, and Avita Medical up 14, Carnarvon Energy up 13, and Arizona Lithium stocks. Oh, and we interviewed Catapult today, which is up almost 13%.
Get Andrew back in to explain it to us. He's left.
Check that interview because Andrew Gagan had a great chat, I believe, with the CEO. And let's have a look at some of the small cap laggards.
BlackRock Mining down at 13%. OFX, that was one that we were following and obviously brought you that news earlier. It was down 11.3%. 88 Energy, of course, bucking the upward momentum in the energy sector. It's down 7.5%, as is Pantaro. And Walkabout Resources went walkabout with a loss of 6.5% today.
Oh, we love it. Now, let's check in and see what's happening overnight. In fact, we don't really need to check in because I think everybody knows it's the
CPI.
US October CPI, which will be out New York time at 8:30 a.m, but we'll probably all be tucked up and sound asleep. Also looks like FOMC, Jefferson and Goolsbee are going to be chatting. NFIB, small business optimism, and then we've got the Eurozone. Is that?
It's ZEW survey.
What's that one?
It's I thought it was actually a German survey, but it's about economic activity in the Eurozone. Yeah, and third quarter GDP second estimate as well.
Yeah, so potentially a market moving night. We'll have to just wait and see. And let's check in and see what is happening tomorrow, Jules.
The wage price index for third quarter, and then of course we'll be looking very closely at the China IP, industrial production and retail sales figures for October too, and then we're looking very far out for of course tomorrow night with UK CPI and PPI and US PPI retail sales for October, along with Eurozone industrial production for September.
Absolutely, it is a total data deluge this week. And let's have a final check and see where the markets have rounded out. And I have, in terms of the ASX 200, let's see if it held its gains. Yes, it did. Up about 58 points, 0.83%.
7,000.
7,006.
Yeah.
There we go. And the CBO 200 up by over 10 points, or 0.8%. So now registrations are now open for our next virtual investor event.
Small Caps Big Ideas is back for 2023 and will be bigger, better and faster. If you weren't a subscriber in previous years, well, we bring together 10 of Australia's leading small cap fund managers to each present one high conviction idea.
And this year we're throwing in a Fast and Furious special edition of The Call featuring micro caps chosen by you. Register to watch live or on demand at ausbiz.co/smallcaps23. That's ausbiz.co/smallcaps23.
Well, that does it for the COB for today on a positive day. As we mentioned, above 7,000 on the ASX 200. We do love to see that.
Absolutely. Green on screen. And we had lots of amazing interviews. We've had the UBS Australasian Conference
you guys were very busy
over the last 2 days. So check out some of those interviews. There'll be a few more coming through tomorrow, as well as lots of great guests that we had both live in the studio and via Skype. But I think that's a wrap for today, Jules.
It is a wrap. That's a wrap, as they say in the biz. We'll see you tomorrow.
Have a great night.